Greetings and welcome to the latest episode of Legal Bites, the official podcast of Cummings and Cummings Law, where we focus on helping businesses and their owners re-domesticate out of volatile legal and tax environments like Idaho to pro-entrepreneurship, pro-growth states like Florida and Texas. Today, we are discussing how to move your existing LLC or corporation out of Idaho to a new state to avail yourself of tax benefits, among other advantages. But first, a brief introduction. My name is Chad Cummings, and I am an attorney and certified public accountant serving clients in matters of business, tax, and commercial law throughout the states of Florida and Texas. I am Chief Executive Officer of the multi-state, multi-attorney law firm Cummings and Cummings Law. And in addition to my day job, I also teach business and tax law at the university level. I hold 4 degrees, including 2 law degrees, together with a bachelor's degree in accounting and a master's degree in taxation, in addition to 11 professional licenses and certifications covering accounting, tax, audit, and of course, the law. My firm website is www.cummings.law. Now, Idaho ranks as number 9 on the Tax Foundation's most recent state tax competitiveness index, placing it in the top 10 for the first time. The state moved from 11 to 9 on the strength of recent tax reforms, including the reduction of the flat individual and corporate income tax rates from almost 6% to 5.3%. Idaho does not impose an estate tax or an inheritance tax. That's a good thing. It offers a generous de minimis exemption for tangible personal property, eliminating compliance costs for smaller and medium-sized businesses in many cases. State and local debt per capita is $1,815, which is very impressive and among the lowest in the country. Public pension plans are funded at 91%, which is also very strong. State and local tax collections per capita are $5,012 below the national average. By the numbers, Idaho is not a bad place to be from a tax standpoint. Now, Idaho has earned its top 10 ranking through structural discipline, not through the absence of taxes. That distinction matters. The states that rank above Idaho, including Wyoming, South Dakota, Alaska, Florida, New Hampshire, Texas, and others, impose no individual income tax or have eliminated their individual income tax, while Idaho still imposes a 5.3% rate on individual income and the same rate on corporate income. Those rates are competitive until you remember some states, like Florida, like Texas, charge no personal income tax at all. Remember, they're not competing against other states that charge an income tax. You're competing against states that have no income tax, at least at the individual level. To put that in perspective, on $500,000 of pass-through income, 5.3% is, you do the math, $26,500 per year. In Florida, that figure is 0. In Texas, 0. Over 5 years, the difference is $132,500. Over 10 years, the difference is $265,000. Now, that's before we account for the time value of money and the interest that you could earn on those savings. Remember, that's money that would remain in your pocket as opposed to the taxing authority coffers. Now, Idaho's rate is lower than Georgia, Colorado, and several other states, but it is higher than 0, and 0 is the rate in the states that are gaining the most residents and businesses. Idaho's appeal is real and extends beyond taxes, to be sure. The cost of living is lower than the coastal states. The population is growing slowly. The economy is expanding. Business owners who left California and moved to Idaho are certainly in a better position because they traded their 14.4% top individual rate for only 5.3%. And that's a material improvement. But many of those same business owners could have acted and achieved an even better tax income by relocating to Florida or Texas instead. The question is not whether Idaho is better than California. The answer to that question is obvious. Rather, the question is whether 5.3% is the best you can do, and the answer is simple: it is not. Idaho also imposes a single day filing threshold for non residents, which is very unfriendly, meaning anyone who works in Idaho for even one day is expected to file and pay taxes. For businesses with remote employees or contractors who travel to Idaho for meetings, training, or client work, this creates a compliance obligation that states with no income tax do not impose. The withholding threshold is 30 days, but the filing threshold is 1 day. The gap between those two numbers creates an administrative burden for both employee and employer. Now, the fiscal foundation is not bad. As I mentioned, a 91% funded pension plan ratio is among the best in the nation, and less than $2,000 in debt per capita is also very strong. Idaho is not a state that needs to raise taxes to cover unfunded liabilities yet. That stability is an advantage and distinguishes Idaho from states like Connecticut, Hawaii, and Illinois, where unfunded pensions and high debt levels create persistent pressure to increase revenue. Idaho is unlikely to raise its income tax rate, but it is also unlikely to eliminate it in the near future. The 5.3% rate is where the state has chosen to settle for now, and it appears to be a permanent or at least semi-permanent feature of the tax code. Enter redomestication. Redomestication is the lesser known legal process of transferring a company's legal state of domicile to a new jurisdiction without dissolving it, without creating a new entity, and without triggering a federal income tax when performed in strict compliance with the Federal Internal Revenue Code, applicable Treasury regulations, and the statutory frameworks of both the destination and departing states. When performed correctly, the company retains its existing federal employer identification number, contracts, credit history, and bank accounts. Contrast that with foreign entity registration, also referred to as foreign qualification. Foreign entity registration does not change the company's domicile. It keeps the entity in Idaho and only adds a second state of compliance obligations. A traditional merger is also not the same thing as redomestication, because a traditional merger creates a new entity in the destination state and is significantly more complex, costly, and time-consuming than redomestication. Finally, dissolution, also referred to as termination, is the legal equivalent of the death penalty for the company. There is nothing left to move. Dissolution is not a relocation mechanism. It is a liquidation mechanism. If you have an attorney or CPA who's throwing the word dissolution around as a mechanism to relocate a business that's going to continue its operations in a new state, caveat emptor, seek better counsel. Redomestication, when paired with a change of personal residency and a reduction or cessation of business operations in Idaho, can reduce or even eliminate state tax exposure there for the entity and its owners. Now, Idaho is not the worst place to be. It is well managed, fiscally sound, and moving in the right direction. But it also charges a 5.3% tax on every dollar of income. Florida charges 0. Texas charges 0. That gap does not close itself. I have personally assisted a number of companies redomesticate out of Idaho with a 100% success rate to date. If someone is telling you it's impossible to redomesticate an entity out of that state, I encourage you to seek a second opinion from knowledgeable legal counsel. If you have questions regarding potentially redomesticating your existing LLC or corporation, please use the link in the description for more information on this legal process and to schedule time for you and I to speak one-on-one about your specific scenario. Again, my name is Chad Cummings, and I hope that you found this information helpful. As always, the information in this presentation is general in nature and is not legal advice, because legal advice, by definition, must be specific to a particular set of facts and circumstances. Should you have any questions regarding this information or the content of any of my earlier presentations, please visit my firm website at www.cummings.law, not .com, but .law to schedule time for a consultation. I look forward to the opportunity to speak with and perhaps even work with you very soon.